How's it going, everybody? It's your boy KIFS Crypto back in the house for yet another market recap. Now, I hope you guys enjoyed this little recap of mine. I'm going to be talking about a little bit of news going on in the market, some charts regarding Bitcoin dominance and also global cryptocurrency market cap, and also I'm going to tell you different ways that you can invest into the market, all of which work depending on what type of trading style you prefer yourself. So if you do enjoy this little recap, make sure to leave a like, smash the subscribe button, leave a thought down below in the comments if you have a question or anything else for moi. Now let's get straight into it. First of all, I'm looking at Bitcoin's chart, and also I'm going to take a look at two other large cryptocurrencies out there. But in general, everything is just eating a big pile of goo. So we're going downwards. Bitcoin is heading towards the 18K mark as I've plotted the previous all-time high. And some people say 20K, but to be completely honest, we could very easily dip even into the 16K mark at some point. So don't be surprised if that happens. Now, quantitative tightening is still largely at scale. The Fed and other central banks are increasing interest rates, which means that people will be more tempted or people will tend to save more money, which in the long run leads to a fall in economic progression in the GDP and also leads to a recession over time. That is what most people are fearing, and especially nowadays with the crypto collapse with Luna and everything else going on, Celsius even overheated a little bit and a large scale chaos actually happened. Celsius, if you guys didn't know, is one of the largest crypto banks out there. They were working perfectly until now. The owner, Alex Mashinsky, good guy, everything was nice, and then somehow they had this Bear Stearns moment, as they said, or Luna was the Bear Stearns moment, and Celsius Network threatened to become the Lehman Brothers like in the 2008 housing crisis. Essentially what happened is a lot of their investments actually just simply failed because the market was going too down, and the overall trust in Celsius as well as the whole global crypto market is falling rapidly to new lows. And the key takeaway from this is that no, it's not only crypto, it's everything, right? Everything will be going into a slight recession at this point, and then the Fed is going to have to balance between, on one hand, you have the recession, and on the other hand, you have interest rates and all of this other stuff. So it's either a recession or we're going to have really high inflation, and both of those things are not good, which is why the economic machine always works as sort of a scale. It's always balancing one thing out for the other, and over time it's going to get fixed. Don't worry, we're not going to drop into a 10-year recession. It is not very possible. Economic growth and prosperity will start to increase as soon as we're still kind of in post-COVID times, right? So we're still not back at the ideal production level as we were before COVID, as we did, retrace from the 2008 housing market crisis. So even if we do have a little recession right now, it's normal. It happens every 10, 20 years or whatever. And, the market always goes in waves, but generally it continues to move up as we get better at efficiency, as we get better at technology, innovation, and all of these other things that move the supply curves. Now, when it comes to the crypto charts, we still have Bitcoin on top. We still have Ethereum at the second spot. USDT holding strong. Now, will we have government-backed stablecoins in the future? Perhaps that's a good way to regulate the crypto industry and potentially protect the industry from shortfalls such as what happened to UST and Luna. But, on the other hand, I believe personally that everybody out there, all of these governments, want to get into crypto as much as possible. So stablecoins backed by the government are going to be a thing in the future. And also everybody will race to buy as much Bitcoin as possible when it drops below the 18K level. And that does include large institutional players as well. Now, when it comes to the global crypto market cap, we're seeing a similar situation, what happened back in 2017, but on a much larger scale. It's a large scale head and shoulders pattern or something, and now we're just moving downwards, which is completely normal. Nothing to fear. When it comes to Bitcoin dominance, though, this is the interesting part. Bitcoin dominance since 2014 has been in a downtrend, which means that people are slowly but steadily realizing that Bitcoin is not the best network out there. Maybe it is. Now, this is a theory for another day. Maybe it is the only truly decentralized network out there because the underlying value is electricity, and you can never shut down electricity for the whole world. However, currently what we can see is that the dominance is falling because people are slowly catching on to Ethereum and all of these other projects. Now, one very important thing when it comes to trading cryptocurrencies is technical analysis. So what you can see on the chart right now, we have a nice zone of resistance. We have, up here on the top, we could see a very large scale RSI divergence, for example. That means that the price is making a higher high. However, the divergence is making a lower high, which means that this is just simply one of the reversal patterns that we can see in the market. Now, furthermore, we can see zones of support. We can see correction patterns such as these bear flags, bear pennants, and all of this stuff. And it can lead to very nice decisions in the crypto market. For example, once we did break out of this, it was a very, very easy short going towards the 20K level. Now, did I take this short? No, personally, I didn't. Why? Because I focus personally on Forex trading, because it is a lot larger in volume and market cap and pretty much everything going on, and a lot less manipulation going on, so I can more consistently make profits towards the future. But at some point, crypto is going to reach the $10 trillion market cap, and at that point, we can trade crypto the same as we can trade the Forex market, which is the largest market in the world, because even if you're holding your money in a bank in England in pounds, you're a part of the spec on the Forex market. Now, that's purely technicals, right? You can also trade purely based on fundamentals. So there's a good website out there called forexfactory.com. It's not only for Forex, it's generally tracking news events that are happening every single day. For example, Powell, or Jay Powell as many like to call him, he's speaking today and he's going to talk and give some hints about policy for the future. Now, do I actually watch all of these talks? Sometimes I do, but in general, the most important is to see the outcome of it and see how it reacts to the market. And over time, you gain more experience to become better at reading news and potentially seeing things that other people don't see. Now, my ideal form of investing or trading is combining both technicals and fundamentals, and essentially how I do that is I follow a few key fundamental leaders such as the US 500 or the top 500 companies in the USA. Now, this is an index of them all, and as you can see, it's dropping, and as a result, Bitcoin is dropping as well. But were we to, for example, create a double bottom, now this is the first target that I had, right? Because we do have somewhat of a support. So were we to create a double bottom of some sort at this area, I would be tempted to be looking at a long as this high right here is broken. Now, not only along on the US 500, but for example, along on the Australian dollar against Japanese yen, because they are correlated in some sense. This is a story for another day, but when the SPX is going upwards, AUD JPY is also moving upwards. It's a positive correlation, and it's very important to know. Similarly, Bitcoin is also positively correlated with the S&P 500 currently. So if the S&P turns and starts moving upwards, well, we can easily say that Bitcoin will do the same thing and base our research on the fundamentals. Then once we have the fundamentals in line, we can easily head on over into Bitcoin's chart and find a nice favorable pattern on the lower time frames, perhaps something like a head and shoulders, or we do have somewhat of a head and shoulders right here, but I wouldn't be confident longing at this point unless we see a break. And in general, that's what you do. You look at the technicals, you look at the fundamentals, you make a decision, you take a position, and you make a win or a loss, and that counts as a either a win or a profit in your balance sheet, or it's a loss on your balance sheet. That's what trading is. Investing, on the other hand, very different thing. All you need to do if you want to invest into crypto is dollar cost average, or buy more and more as the price drops lower to create the best possible average price for you. That's called DCA, boys. And last of all, I do have an alert on Bitcoin at the 16.6K level, because in the case that it does wick down very, very quickly, I want to be able to sweep in and get a position in there long. Now that's it for today's video. Hope you guys enjoyed this little market recap. Next time, I'm going to talk about some other interesting stuff. So make sure to subscribe if you haven't. Leave a like and comment down below with your thoughts. Now lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the crypto world. Now thanks for watching. KIFS is out, and I'll see you guys in the next one.